Rakesh Arora, founder with Go India Stocks. Rakesh, the historical template is interest rates go down, dollar index goes down, and then metals they go up eventually. Are we in repeat of the same cycle what we've seen post 2020 and post 2008?
Well, macro is supportive of commodity prices to sustain where they are. Key differences from the previous rallies. Last 3-4 decades, China has been the key driver. And while we are hearing about all this stimulus, which was announced yesterday, the confidence in China to be the same driver is a little bit missing. And the quantum of China is so huge; it's like 50% of global commodity consumption. That and the second best is say probably India, which is 5%. So the gap between the first and second, driver of commodities is so huge. There's nobody who can come and replace China in the short term. The second difference is that there's meaning for the last few decades it was more globalization, and now countries are becoming more and more inward focused, and we are seeing a lot of trade barriers come up. And the big demand for commodities is coming from new age sectors like EVs and renewables. And China has again has been the key driver there in terms of putting capacities. But rest of the world doesn't really want to take from China, and they are putting up trade barriers. I'm not sure rest of the world is ready with capacities to really drive commodity demand. So I would say that probably commodities have found a bottom, but will it be a rerun? Will it be a super cycle? That's not very evident at the moment.
Do you think ferrous and non-ferrous, they both could move in tandem with each other because of this entire macro dynamics, or the demand supply constraints are very different?
See, in terms of supply, there is constraint side because copper, etc., little bit difficult to find and difficult to mine also. So supply equation does come into picture for some of the non-ferrous commodities. Uh, Ferrous, there's plenty of capacity, so supply is not a constraint. So that's the differentiation. So probably if somebody is looking to take a punt, maybe it is non-ferrous at the moment. But I think they would move in tandem. The quantum move would be different for both the commodities.
Rakesh, the other thing is, while the stocks back home, they have seen a recovery from those September 9 lows, but just wanted to understand how sustainable this is looking to you. Right now what you're seeing is a knee-jerk sentimental kind of move, but does it really look that it can extend its stay?
So at the moment, what they've done is monetary easing. Monetary easing doesn't really move the needle when there's a confidence crisis at home. You really need fiscal incentives, fiscal stimulus to the economy. There is hope that some more stimulus will be coming up in October when there's a bureau meeting for China. So there is expectation building up of more stimulus, but confidence doesn't change by these smaller things. They will have to do a lot more, and that is where the confidence is missing in this rally to sustain in a bigger way at the moment.
I think, the other moving part, and I guess quite critical to this entire metals recovery story, Rakesh, would also be Chinese real estate, right? I mean, they've had almost a half a century of a very strong bull run, and now it seems to be going into this very long lull. And, I'm just wondering, structurally over the next 10 years, do you really see a revival come by for Chinese real estate?
So Chinese real estate, has taken a dip well below the trend line. Meaning, obviously, we are expecting the trend line to be a negative, a declining trend line. But the cut that we've seen in the last 2 years is very sharp. So the demand has gone way below the trend line, which we are expecting for Chinese property market. So there would be a catch up and a pickup back to the trend line. So I'm expecting that maybe next year or for the next 2 to 3 years there could be a pickup, and then we resume our gradual declining journey as we expect from a mature economy. So next 2 to 3 years there could be a pop up just to compensate for the deep cut that we're seeing.
When can India be a swing consumer? We have the largest population in the world. If at all, the per capita could easily double in 5 years. If that happens, then consumption of car, consumption of anything which has got to do with metals will actually go higher. How far are we away from this swing factor? When will the world start saying that instead of China, India started consuming and that is the swing factor?
So that looks very far at the moment, meaning I think it opens before I retire. But at the moment, there's no visibility of that. India can't be China. I think China is ruthless in its execution. We are not really that, aggressive. We are democracy. We have so many constraints. So I don't think we'll be able to go more than 7-8% GDP growth rate. China could sustain double digit for a pretty long period of time.
I also want to talk about what's happening with the cement pack too, Rakesh. Because dealers are expecting a meaningful recovery post Diwali. Should one expect those double-digit kind of volume growth numbers in the second half?
Double-digit volume growth, I don't think that's going to happen. Overall, meaning if we are able to get 7-8% growth rate for this year, that should be good enough. Q2 has been slightly weaker than normally. The reason is, this August we had a lot of rainfall as compared to last year. Last year, August was pretty dry, and there was a base effect. So last year, if you remember, in August, cement demand grew by more than 15-20%, and there's a high base effect also. So this quarter, I'm expecting industry to be like 2-3% growth. And overall, I think if we can pull off 7-8% growth for the year, that should be good enough.
Right. Okay, Rakesh, always good having you on the show, and thanks for analyzing how the metals piece is moving.
Thank you.
If you like this video, then like, share and subscribe to ET Now.